Hello, hello. Can you all hear me well? Hope you're all doing well. Obviously, if we talk about last week, now we spoke about last week about the dollar, right? We spoke about, more weakness than the dollar, and there's nothing really that's telling us not to go bearish the dollar. So we've moved quite a lot, right? We moved a good few hundred pips across a lot of the pairs that we were looking at. Right, we saw like GA sells, we saw a good amount of GN sells. The yen actually has moved quite a lot. I don't think that was intervention though, personally, but we've moved quite a lot in terms of the markets. Now, what we have to ask ourselves is, can this continue or not? I just want to see in a poll in the chat, how many of you believe that this can continue in terms of more big sells than the dollar? And remember, the way to understand fundamentals, right? Because remember, fundamentals at the end of the day is the driver of the markets, is to think about what is driving it right now. So does anybody know what is driving the dollar right now, or markets in general? Actually, it's kind of like broad based everywhere. But can it continue based on sort of the news we've been seeing, at least anyway? Will these markets continue? Yes, cool. We've got a poll up, amazing. Will it continue? We're talking about the dollar right now. We're not talking about any other ones or equities or whatever. We're speaking purely on the USD, because the dollar is actually driving everyone else, right? It's driving where the AED is going. It's driving where sort of the yen is going. It's driving mostly where equities are going because of what's known as the debasement trade. But it is the main driver everywhere. So I just want to see, where do people believe the dollar is going to go? You can drop in the chat, or you can, vote as well. And then that way, trading becomes a lot easier, because you're no longer confused about where markets can go, because everyone talks about, right, getting statistics on whatever, right? You want to get like back testing statistics on your technicals, right? And you do the same thing with fundamentals. You want statistics to back up what you are saying, because we all want that. Numbers don't lie at the end of the day, does it? So if we can understand what is going on, we can understand how much more a currency can move by. And you can apply this framework to every other asset class. If you trade bonds, you can do it through bonds. If you trade commodities, you can do it through gold and oil, etc. If you go through equities, you can obviously do it with ES and the NAS, etc. And any other market you trade. So let's see what people are expecting. Let's have a look. So let me move this out of the way. I believe I'm still bullish on the Dow. I've never traded the Dow personally, but it's I probably would agree with that, to be fair. I believe gold is the leader, and since gold is going up, USD is falling. That is a correlation. It's not the reason it's happening. The reason is fundamentally. So what we have to understand is, what is the fundamentals, and then we can pin that, the price action, based on, okay, gold should go up because of X and the dollar should go down because of Y. It's not because gold has gone up, the dollar has to go down. Some, periods where you see equities go lower and the dollar goes lower. That doesn't make sense if you look at it from a correlation perspective, but it's because of the context for the reasoning. So yeah, that is technically true, but it happens for a reason. I heard the yen is taking a beating, like a serious beating. It has been recently. We did peak at like just before 160, and we had dropped quite a lot. There was some speculation of intervention. Intervention is when the Ministry of Finance for the said country, like the MOF, who is the ministry for Japan, they tell the central bank to intervene. And then what they do is they sell dollars, and then that strengthens the yen. So there is some speculation about that, actually, but I don't think that's happened, according to Besant, which we'll look at. I think dollars are going to be crushed this year, especially after taking the new Fed governor. That is true. I would agree with that. The new Fed governor is expected to be quite dovish. And those who don't know, dovish generally is bad for a currency because they are inclined to cut rates. And cutting rates basically reduces the likelihood that people would want to invest into the economy from outside. Because what it does is it means that from an investor perspective, they're getting less bang for the buck, or they're getting less yield on said investment. It will continue to go down until fundamental reasoning Correct. That is pretty much what we look for. So yeah, in my opinion, I don't think anything has changed in terms of like where the dollar can go or where gold can go, or like the AUD and the NZD, who are actually doing quite well recently, where they can go. Nothing's really telling us to change that bias. Now, today is quite important. Why? So we have on here 70% probability of yes, 30% probability of a no. So pretty good odds, in my opinion. So today we have the Fed. Very, very important meeting. Why? Let's have a little look. So if I just show you what we've got going on, let me just go straight into the USD. We did actually have the Bank of Canada earlier, but today we have the Fed. Now, the way to understand meetings, if I just show you my screen over here, the way to understand meetings is to think, what is the expectation? So the expectations are the Fed shouldn't do anything with interest rates, so therefore they'll keep it on hold. So if they keep it on hold, you're not going to see no movement in the dollar. You're not going to see no movement in gold and the bond market, etc. So that's not tradable. And we always spoke about this earlier about we need something to be tradable always in order for us to capitalize on it. So they're not going to do anything with rates, so we can't capitalize on it. The thing we can capitalize on though is if there's any change in tone. So right now, the markets aren't expecting a cut until, where's my little thing up here? Up until, I think it was June, from what I remember. So March is a hold, April is a hold, June is when the first cut comes through. So the markets aren't expecting no rate cuts until June. So the way we need to think about it is, does the Fed emphasize that being correct, meaning they, the way they word their fancy language, do they expect a rate cut to happen around that period, around the middle of the year? If there is, you're going to see no movement in the dollar. Why? Because markets have already anticipated it. However, if they bring it forward slightly and the language sort of allows them to bring it forward based on, it could be something about what Trump is trying to do, then the dollar continues to sell off, right? And that's all we're focusing on, is what does the Fed say, and Powell, of course, 30 minutes later, what does he say about when the next rate cut is going to come through? Because that is where the dollar will go based on that assumption. Because we already know Trump is bearish for the USD right now. And if the Fed suddenly starts to become a little bit more inclined, that should allow those pairs that we're currently in, if you're in gold longs, silver longs as well, has actually been quite a big one. The dollar, euro dollar, GU, AU. AUD USD is actually a very, very good pair at the moment. It's seen a lot of positivity, and I don't think that will change. And actually, to be fair, if you're in AUD longs right now, I think that's a very, very good hold, because next week we have the RBA, who are expected to raise interest rates, and that should be very good for that currency, by the way. So if you're in longs on the AUD right now, it should, fundamentally, it would be inclined to hold that pair further. So there's a lot of opportunity there, just to say the least. So that's what we need to be focusing on, is about what is mentioned about what happens after January. Is it being brought forward? Is it being pushed back? Because that's where the volatility is, by the way. Yeah, people have been selling the dollar to strengthen their own currency. Correct. That's intervention. Yen was strong months ago, like safe haven. COTC was bullish, but now it's just bad. I haven't looked at COP data on the yen recently. But the reason it's been quite bearish recently, i.e. dollar yen has been pushing, is more so because of what the BOJ wants to do, and politically in Japan as well. So if you want to go long the yen, you basically, like what we were speaking about earlier. So let me just move over. Like if you're looking at dollar yen, you have to ask yourself always, what is the reason this sold off? So why did it sell off? So you put a little text there and say, okay, cool, it sold off because of X, Y, and Z. Then you have to ask, is that changing? And if it's changing for the better, then you can hold that sell, or you can get in on the pullback. If nothing has changed, right? If this was intervention, which Besant, according to Besant, which is here, says the US hasn't intervened in the yen, then there has to be a reason for the yen strength to continue, because right now there's still political stress in Japan. So for me, I can't see the yen strengthening anytime soon until that political situation gets resolved. What does that mean? Well, basically what that means is the sell-off we've seen now is opportunity for us to get back into a long, into that I'm also long AUD yen, by the way, because that's where a lot of, that's where the pure divergence is. AUD JPY longs would make sense, right? Because we're quite bearish the AUD, and next week especially, and there's no reason fundamentally for the yen to strengthen further. And that's why this is opportunity, right? Always try and find divergence. And that's where you can get the best trades out there. That's when you can capture the most yield. You can hold the pair the longest, squeeze out more risk to reward, and therefore it becomes a lot less stressful, doesn't it? So let's see what we got in terms of some of the news. I just want to have a little look. I mean, if I just open this up in a new tab, we'll see if this is anything for us to look into. So Besant touts a strong dollar after Trump brushed off its drop. So obviously they're talking about that sort of pullback we're seeing. It's very shallow. It's very small pullback though. You know, go on a high time frame, right? Always start from the higher time frame. That's quite a small pullback. So I can't see is like, you know, oh, something about this yen dollar strength. No, you must look into the reasoning why. And to me, the reason why we're seeing this pullback is not warrant for strength in the dollar. And that's why it's opportunity. If it's something big fundamentally that's changed and then the dollar pushes, then sure, we can change our buys very short term. But if there isn't nothing there that tells us, we don't change it. And that's what you have to be doing fundamentally, right? Is you're not always, I think I mentioned this last week, but you're not always changing your bias every single week, right? You can hold a bias up until the data tells you or the sentiment tells you. Once it tells us, then sure, we'll change it. Until then, you keep a bias. You hold that bias until something changes. And that way you crunch out, you know, you sort of remove a lot of the BS that you see on sort of the news and stuff, and you've only focused on what is important. So yeah, I would say it's not really anything of interest, to be honest with you. That's opportunity. So where was I? Over here. I just want to double check and see if there's actually anything in here that's of interest. The US, as always, has a strong dollar policy, but a strong dollar policy means setting the right fundamentals. If we have sound policies, the money will flow in. Besant also... voice break. Besant also said the US is absolutely not intervening in the currency market to sell the dollar against the yen. So that basically kind of reaffirms to us, in a way, that maybe the intervention we did see, or potential in quotations, that we did see on Friday last week was not intervention. So therefore, the yen can't be that strong, or it can't remain strong because fundamentals isn't aligning with it. So that's why, like, if we look at AUD JPY, right? I went long on Monday. So if we notice AUD JPY, we had this big sell-off, right? Cool, that's fine. We'll let the sell-off continue, or we allowed it to sort of continue. I was asking myself, right, does it make sense for this sell-off to continue based on the fundamentals? And it was a no, in my opinion. So I looked at this, I think it was an 8-hour demand zone, which is here, and it lines up with prior highs, and it lines up with some big whole numbers. So therefore, it was opportunity. So I went long, and that's mainly the reason why we do it. It's not so, like, yes, technically the trend is there, but like trends will always change for reasoning. So that's how you can identify a big sell-off, and is that a change in trend? If it's not, then you can capture the big old push back up, and that's what we kind of have to do. So I don't think that was intervention, which, as I said, allows the yen to sort of recover back on its losses story. I just want to double check if there's anything else in here. I don't think I saw much. I know I have a couple of articles actually. Let me check on my other screen. Where is it? We have this one, and we have this one. So we'll read through some of this a little bit later on from JPN and GS about what they believe, kind of what is happening in markets right now, and can it continue. I remember a lot of these news things that you sort of look into, like if you look at Bloomberg and one person says to go long, you don't obviously go long because you need it to support your own bias, right? Use it as like a confluence, right? It's like, for example, when you have a mentor, which by the way is always important. If you have a mentor and he's going long, that doesn't mean you have to go long as well, right? You have to go on the charts and find a bias and from your own personal experience. And then if other people are in the right mind, then that shows you are doing something correct. And you do this same thing with these articles that you read. You don't just purely base your bias on what everyone else is saying. You have to do your own bias and then look at what other people are doing. So I just want to double check and see what. So this strategist at JPM says Besant's comments on non-intervention doesn't take additional jawboning or even intervention off the table, though he reiterated a core position that setting the right fundamentals is key for FX over the long term, not just for the US, but including Japan broadly. And I think that would be correct, because the right fundamentals, if we look at the yen, doesn't make sense for strength. It does. There's nothing in there that tells me that the yen has to strengthen, i.e. like dollar yen sells, NZD JPY sells, CAD JPY sells, right? There's nothing in there that tells me that those pairs can continue. So therefore, that is opportunity, isn't it, to capture? Because we've basically moved away from where the data and sort of the sentiment in that said country is relative to where price action is. So what you're basically doing is a mean reversion back to normal price action. I'm sure you might have heard that term before. The new Fed minister is dovish, so that's also a reason. Yes, especially pretty true, yes. So what does that mean, right? Based on everything we've seen. Oh, let me move this. I don't know why that's staying there. Let me minimize it. There we go. Where was I? Yeah, because we're right now bearish the dollar. Everything that comes through that suggests more bearishness is like extra confluence, I guess. Like it gives you that bias that, oh, now I need to continue to hold said sells or whatever. So what it does, it adds that confluence to you to say, okay, I'm going to buy on euro dollar right now, or I'm going to buy on AUD USD, or I'm long GBP USD, right? You're long cable. What you have to do is just find news that comes out that supports that idea. In addition to that, what you do and what you should be doing is news that basically battles that idea. You have to think, is this just noise, or is this something that is something of potential to look into? And a lot of the times, a lot of the dollar strength fundamentals that have come out over the past couple of weeks, basically the data is not that bad. Markets don't care about the data right now. They only care about what Trump and what the Fed wants to do. Now, obviously right now it is more about Trump, and there's nothing in there that tells us that we should go long the dollar. And that's why last week we were speaking about it, about how more dollar weakness should come through. A week later we've moved quite a lot, because nothing had told us at that time that the dollar should go back up again. And that's all we're doing each day, just saying, is there any news that comes out? Is there any data that comes out? And does that support the bias or not? That's pretty much how you do it. Sounds simple enough, but obviously it's not simple. Now, I just want to double check now, just some articles. Firstly, what we're going to start off with is GS. And let me full screen that, and there we go. So obviously GS will have their own views. JPM will have their own views. HSBC, Citibank, cool, whatever. We now have to think, is our bias that we have supportive of these views as well? And I was reading through this doc today, actually. And let's just have a little look. So we're not going to read through all of it, because to be honest with you, a lot of it is kind of jargon. It's kind of fancy terms to keep people happy. So what we have to do is kind of cut through a lot of that and just get straight to the good stuff. Now, what they're saying is, this is Friday last week, because the way they release their research is every Friday. So we just kind of backtracked a little bit. So I just don't want to read through all of it, because obviously a lot of it is not important. But what they're saying is, in particular, the dollar underperformance against broader risk-off price action. Does anybody know what risk-off price action means? Basically, what is risk-off? That's the question you have to ask. What is risk-off? And just kind of just break it down, right? Try and break down what risk off and risk on means. So what does risk off mean? Fundamentals are always important to get a good view of market conditions. Correct. Yes. Because at the end of the day, right, price action is a reflection of what has happened fundamentally, right? Because if you look at the DXY prior to when Trump was doing his uptrending, how do we go from a big uptrend to a sudden big downtrend? There has to be a reason for that to happen, right? And how does price action continue in that direction? It has to be driven for reasons. So what you have to do is identify those reasons and just keep up to date with it. And that's all you do. And if you're in a long or a short, you just constantly keep up to date with what's going on and thinking, does this allow me to hold the pair or not? And that's all you're doing. When cash flow shifted to safe haven assets, correct, right? Safe haven assets are stuff like gold, stuff like the yen, the Swiss, USD sells, by the way, is a risk off, or the dollar is kind of seen as risk off, to be fair. But dollar sells would be an opportunity, especially if it's dollar centric, which it right now is. If it was a global environment, you'd actually be long the USD rather than selling it. But because it's dollar centric, i.e. it's mostly only affecting the USD, the dollar sells off even though the markets are spooked, right? So that's a common misconception that a lot of people do, that the dollar should technically strengthen in a risk-off environment because people flock to safety. And given that the US is basically one of the largest countries out there, they have a fairly stable political landscape and liquidity in USD is quite rife, right? There's a lot of dollars out there. It's easy to change and exchange money. That's why it's seen as risk-off. So if it's only USD centric, then it only affects the dollar. That's important. So yeah, gold, like I said, commodities, mainly gold, the yen, the Swiss, and obviously because we're in a slightly different environment, the dollar sells would also be a good one. So therefore, where is their opportunity then? If you want to find the best yield, look at what pairs have moved the most since Trump, or since Trump. Gold has moved a lot. Swiss has moved quite a lot. Surprisingly, the AUD, but that has seen as a function of China as well. China's done pretty well from this tit for tat, which has allowed the AUD to strengthen also. In my opinion, what will move the dollar today is new. Yeah, I mean, dollar's only going to move if new things come through. So if the Fed brings forward rate cuts, then the dollar will sell off further. If they push back rate cuts, that will be interesting. If they push it back, that should technically be good for the currency. So I want to see, how does the dollar react to that news, right? I want to see how inclined people are to be long the dollar in this environment. That's what I want to be seeing. Silver, yeah, definitely. Historically, though, gold is always seen as the safer haven. But yes, technically also silver. BTC has been liquidated 2 billion. That's pretty crazy. That's a risk on commodity, though, or asset class. Nevertheless, where was we? Bearing in mind that elevated policy uncertainty and foreign shifting demand for dollar exposure help FX moves, we do not expect these themes to be as prevalent in 2026. But in our view, they will at least limit dollar upside. So basically, what are they saying right there? What they're saying is, fundamentally, there isn't that much upside to the dollar based on elevated policy uncertainty and shifting foreign demand for dollar exposure. So if institutions are hedging, then that can strengthen or weaken the currency based on how much they are hedging by or reducing hedging. So that is something to look into. And if unfriendly cost asset correlations become more frequent, it could spur another round of FX hedging, which remains focused as the environment tends to lead to outsized FX moves. So that's something to look into. It has become a little bit more prevalent, but it has kind of died down a little bit. And with dollar recovering some lost ground in the coming weeks, especially on European crosses. Now, that's an important one. If the dollar recovers some lost ground, meaning, if we go to DXY, this pullback continues. Why is it going to continue? Because so many people have sold the dollar for obvious reasons, right? If they now suddenly see that the reason it sold off is starting to shift, they're going to sell that position that they have And that strengthens the currency as well. Then they're going to go back long the dollar, because the whole reason it sold off is no longer there. And that's all we're doing each week, is assessing, and each day obviously, does the sell still make sense? Is Trump still banging on about tariffs, creating stress? What is Powell saying, etc.? And that's all we're doing. But this pullback right now, I don't think is warranted in terms of a big shift. But if something suddenly comes through, then sure, we'll quickly switch our bias and we can capitalize in that big pullback that occurs. Because it's not about, right? Like this is something that I've noticed a lot of people try to do, is they try and capture the wick high and the wick low. It's not about capturing those wick highs at wick, because realistically, it's not realistic, is it? Trying to like capture this wick here and that wick there and that wick there and that wick there. It's not realistic. What we want to do is jump on the trend when it forms. So if that means that you're 100 pips late to the trend, it doesn't really matter, does it? Because you can still capture a few more 100 pips. So if you think about it on relative terms, you're still going to be in a very good trade. It's not about capturing those wick lows and wick highs. You can't do that consistently. It's about jumping on the trend when a trend forms, and then you hold that trend until it shifts away. That's all you're doing. Where can we see these articles? Bloomberg one is that one. One with the crash starting gold. We're starting. True. When a reason comes through, that's it. When somebody has a reason to say, okay, I no longer want to hold gold, then it will sell off. If they don't have that reason, they're not going to sell gold. They're going to hold that position still. Are they going to remove Powell? He's at the end of his term, so he has to go. The rate cut's already priced in. Labour market is stable. Inflation is on target. All depends on the tone, correct. I have a question for you. When you trade fundamentals, that's great, but how to take position when technicals used to get in? I have very simple technicals. I don't overcomplicate it. You know, I've been through that period of time in my trading career. I've been trading for 7.5 years now. So I've been through that period of trying every technicals, trying everything. And what I notice is simplicity pays at the end of the day. So my technicals are very, very simple. The way I do it is simple supply and demand. So S&D, supply and demand. I'm not talking about the game playing COD. So very simple supply and demand. High time frame levels. And maybe a bit of fib, but realistically, it's not really necessary. That's all I do. So supply and demand, high time frame levels, and maybe a fib if I want to be a little bit extra spicy. So for example, what I would do here, if we're just looking at the DXY, or let's look at a live chart like euro dollar. What I do is start on the high time frame. So fundamentally, I want to be long. So I'm not going to change that and think like, let me try and sell euro dollar. If nothing's telling me to sell it, I'm not going to sell it. So what I will do, start on the high time frame, and then we look for high time frame levels, right? We look for like big whole numbers, basically. So for example, on euro dollar, we will look at 119, 115, 116, 117, 118, whole numbers. Then you can look at sub whole numbers, like for example, 115, 500, 116, 750. Then supply or demand. In this example, we want to be long, so it will be a demand zone, wouldn't it? What I will then want to do is, because there's no demand zone on here, apart from all the way down here, around 117, it's still valid because there's no price action that's relevant in there. But I don't see a pullback that deep. So what I will do then, okay, let me drop a time frame. Is there any demand zone here? Maybe there, very small one, but I'll leave it alone for now. Then I drop down to the 4 hour. And there's not that many demand zones around here, in my opinion. Then in this example, this is kind of a good one because there's not many regions, but I don't see a big pullback. What I'll then do is think whole numbers. So right now, 119 on euro dollar seems quite adequate. Because what you'll do is you look to your left, right? Look to your left. 119. And we can see 119, big sell-off there that occurred. If I zoom out a bit more, we had a bit of price action here, a bit of choppiness here. So this seems quite strong. Then what I'll do is, if there is a demand zone there, then perfect. That's like two confluent. Let's say that's a demand zone, right? Then what I'll do is drop down to the 1 hour once we get towards that region. So I'll then wait for price action to push into that region like that. What I'll then do is wait for a break of structure. So a market structure shift, break of structure, whatever you want to call it, it all means the same stuff. Break of structure and a close above that high on the 1 hour. If we can get a close above, voice breaking again. If we can get a close above that high on the 1 hour, perfect. I'll then go 1 hour, 2 hour, whatever, and see if there's a demand zone. Let's say there's a demand zone there. We'll wait for the pullback into that demand zone. If I start to see a little bit of rejection, I'll go long. So even if I'm slightly above it, after the rejection, that's perfectly okay. Stops will be below the high time frame low that we marked out. Go back on the daily time frame, zoom out, look to your left, and think, okay, where is the next high above this high we made here? So we can say then around 122. Uh, 122. Perfect. Done. That's all I do. Like, I don't try and overcomplicate it. All right. And then I'll ask myself, does it still make sense to go long? Yes. Okay. So this seems like quite an adequate, decent trade. If I get into the pair, right? So let's say we're in the pair right now and we're in euro dollar longs. Cool. Makes sense. But then let's say we get up to here and then something comes through. Something that's like quite bullish for the dollar. We don't hold this dirty trade anymore. We don't want to be in euro dollar longs at that point. So we'll exit. You could either exit at 50%. So 50% of your position gone. And then see what happens. See how the markets react to it. Or you exit the whole position. That's completely up to you. That's more personal. I personally will exit at 50. Assess it. And then if it's like, oh, okay, there's quite something big. Then I'll exit, like, I don't know, the rest when we see that big sell-off on euro dollar. And then I'll wait for that pullback and then we can get in sells. Because that's all you're doing is you're just assessing, does it make sense for this pair to continue or not? That's all you're doing. So that's my technicals really on a very basic level. Hopefully that makes sense. Let's see, I'm more of a swing. I've tried day trading back in the day, back in 2017 and 28. When did I start trading? After first year of uni, so 2018. I've done and dusted all that, honestly. For me, it just doesn't work. 50%, 0.5 is the only, yeah, I guess so. 50%, it's like 50% discount. We will want 50%. FMC starts soon, correct, in about an hour and 20 minutes. Are you in any trades right now? I am. AD, JPY, and GN cells are the big ones. Are more recent on the prop firm I'm testing out. Full risk, imagine. So yeah, that's basically my entry model. Like, I've done every strategy out there that you can think of, right? I've done ICT, I've done liquidity concepts, I've done Wyckoff, I've done every other thing out there that you can think of, right? I've tested it, I've back tested it. For me, it doesn't work, right? With all of the data that I compiled, it just does not work for myself. That might just be the way I look at the markets. That's perfect. Every strategy will work in certain different market environments, and if it works for you as well. And this is just what worked for me. And I've not changed this whole strategy for, I got into sort of this one around COVID. So 5 years, well, 6 years ago now. Jeez, 6 years ago. So I've done this strategy for 6 years. Before that, I was testing out every other strategy. So yeah, anyway, sorry, enough of me about yapping about that. Yeah, so hopefully that's made sense. If you have any other questions about that, please let me know. Mark, do you trade prop firms or you own? My own. Back when I started, there was no such thing as a prop firm. So prop firms have been mostly prevalent since COVID. And obviously people have told me to get into prop firms. I just couldn't be bothered, to be honest with you. However, a lot of the people that I know now, who you probably know as well, has just told me, like, get in, try it out and see what happens. So yeah, that's pretty much what I've done. So I've started prop firms now, but I've done personal for many, many years. What was the rest of that question? Which broker? I personally use IC Markets. That's not for me to say that they're the best. It's just what I've used since I started. Like, they were like the best, like really good. You've got other ones out there like Vantage. If you are in the US, I can't remember any of the US ones. If you're in like use Awanda. There's low FXCM as well. There's loads of different ones out there. You just have to see kind of what the fees are, whether they have like raw spreads, what are the customer service like, because that's quite important and definitely something to consider, etc. Where do you get your data and news from? Bloomberg, Bloomberg Terminal, or any other platform? So here is a good way to think about it. The way you collect data, or the way you get data, right? The people out there that work for the institutions, they work for the banks, whatever, they work for hedge funds or mutual funds or pension funds, cool, whatever, it doesn't really matter. They all get the same data as us, right? They look at the same CPI as us, they look at the same NFP as us, they look at the same PPI, they look at the same Fed meeting. They don't get different things. They might collect it in a different way or not collect it, but they might interpret it differently because of the models that they have, but they get the same data as us. So what we have to do is try and interpret it the same as them. And how do we do that? There's different ways. Obviously, it comes more down to experience, which obviously you will build up over time. But the way to do it would be Excel spreadsheet. If you want to put it in an Excel spreadsheet, you can mentally think about it. You don't have to think about 12 months worth of data, by the way. You only think about 3 months worth of data. Why? Because 3 months is trend creating data. So you only think about, what as the last 3 months worth of data being. And then that gives you good biases on how you can, pinpoint exact trades. So the way I like to do it, I use Forex Factory. You can use Trade and Economics as well, which is another free website. So if you go to countries, it has all of the data there. The way the sort of news, you can use Bloomberg, you can use Reuters, you can use like ING, which is another good free website. And then just formulate trade ideas based on what you see from the data and from what Fed says. And like I said, that comes more down to experience, which you will build up over time. And then all you do is you just keep up to date with stuff. So that's what I do. I don't do anything fancy. You don't need to do it. But what you need to do is interpret the data correctly. And like I said, that comes down to like the experience part. What's your average percentage? I would say at the moment, like 50-50, to be honest with you. Anything over a 1 to 2, I'll be happy with. But I'm holding these trades for a good while. So it's not like I'm entering a trade 5-6 trades a week. I'll be entering 1 or 2 and then seeing if anything happens. Maybe I don't enter a trade that week if there is no opportunity. I only take trades when there is opportunity. I don't try and force a trade. That's just what I've always done. See Wyckoff on every chart. I love it. However, I can't make any profit nor passing any challenge. So maybe try different strategies. If you're new to trading, right, or you've been trading for like a year, which is technically still new to be fair, you have that opportunity to trade different strategies, right? Don't be so fixated on one. See if it works for you. Obviously, test it out and for a good few months, right? But not like, I'm going to test it out for a week and then that's it. Test it out for a good few months. Back test data for at least a year. Forward test it as well. And if it doesn't gel with you, then it just doesn't gel with you. Try a different strategy. Repeat the same process. Can you type names for what? Sorry. Is it better to trade raw spread? I've always traded raw spread, yes. Do you have any suggestions for people who wanted to trade fundamentals? Start with the basics. So for example, start with what is GDP? What's inflation? What is interest rates? And then as a bonus, let me just move that up. As a bonus, look at monetary policy. So like Fed meetings, BOE, RBA, BOJ, etc., RBNZ. And then from there, the other data you see on the calendars, by the way, Forex Factory, whatever you want to use as a calendar for news, it only will apply to one of these things here. So if you see like growth data, that can apply to GDP. If you see and can it contribute to what interest rate expectations do? If you see inflation data, obviously inflation and monetary policy. If you see jobless claims data, that applies to GDP and a bit on the inflation front. So all the data that you see, right, PMI data will apply to monetary policy and what data could mean in the future because it's forward-looking. It's a forward-looking indicator. So the data you see on the calendar will apply to mostly only of these. So therefore, you just have the subsection which they are and what data is important. So yeah, if I was going to start from the beginning, only learn at least those 4 and trading becomes a lot easier. Do I know Trade Nick? Yes, I do. I know him pretty well. He is a legend. He's pretty good. Eventful day, but no trading due to trade of 8 issues. Don't really know, but I personally don't trade with them, so I wouldn't know. Scalping 5 micros ends up paying huge in commission. Do you recommend moving? I don't trade futures, to be honest with you. If that's what you're talking about, I don't trade futures, so I'm probably not the best person to talk to about that. But if you feel like you pay too much huge commissions, maybe it's worthwhile trying to see if the other contracts out there is better off for you. Do you teach how to interpret data correctly? I have been lagging in this domain for day trades. Mostly I take swing or carry trades. That's cool. That's a good one. Carry trades are also pretty decent. Mainly because of interest rates and central bank divergences. I do teach how to trade data. It's not about trying to trade the exact data. What you have to do is interpret what the data means for that trade. So it's not like inflation does this and NFP does this, and now let's trade that NFP or CPI print. It's about what does that data mean for the theme. So like if the theme is about the Fed and what the Fed wants to do, then you have to think, what does that NFP or inflation print or jobless claims or ADP, whatever, what does it mean for the Fed expectations? And you then think, okay, this then means maybe less cuts. So I might want to buy the dollar, for example, hold that long on the dollar because of what the data is telling us. So it's not so much about trying to trade the physical data. It's about interpreting what it means for the theme. That's the best way I can do. That's the best way I can say. 2026 is a bear market for commodities around Q1 and starts correction Q2. In this case, how will the dollar do during those correction? To be honest with you, you are always going to get periods of big pullbacks, right? So if we look at like the DXY as a good example, let me just zoom out a bit. You can see these big moves here and these big pullbacks. Like this was 14th of July all the way until the 11th-ish, beginning of October. So you're always going to get these big pushes and sells, but there has to be a reason for that. So yes, correlation works technically. It's only if like the data also supports the idea. So if it supports the idea, it's like the historically it's done this during this period. It's if the data supports. It's like an extra confluence. So that I don't like prejudge my trades based on it has like during this month euro has sold off. Like, because I've been in this industry long enough now to see that sometimes 1 month might be bearish for euro, but euro's gone up. So it's about what is that reason and can it continue? Sorry, if I am talking a lot of complicated stuff, I do apologize. Just tell me, please break it down. Been trading for over 6 years, test out everything I came across. Keep testing. What's up? I'm good. How about you? How average are you holding your trades? I guess not 1 to 2 weeks, longer, right? Because I'm a swing trader. I wouldn't really class 1 to 2 weeks as a swing, to be honest with you. I will hold it as long as data tells me to hold it. So if that means holding it for 3 months, I am going to hold it for 3 months. If it means to hold it for a month, I'm going to hold it for a month. It's only until the data tells me to exit or the sentiment shifts, and then I'll exit. Sometimes it might shift too late and it pulls back 200 pips or 100 pips. That's fine. But I only exit when I believe the sentiment has shifted for that pair. How averaging a holding and do you trail stop losses? The way I do it is stop loss to break even, and then I take partials. So I'll take partials at like high time frame highs. So like if we bought the DXY, which I don't think you can, but if you did, we buy, let's say we bought here, I'll exit a little bit at the high there, assess, does it make sense, hold or remain in position. So yes, I believe we've got to do some giveaways. So for those, remember to type !join, and then you'll be entered into the giveaway. I just remembered we've been talking for 50 minutes now. So what we have today is Apex, Funded Next, and Alpha Capital. So those are the 3, and we're going to run it for about 2 minutes, by the way. The reason we run it for so short is because we have noticed before that people join on other accounts and then they try and join up with that. Obviously, that's just not fair. So that's why we don't run it for like 10 minutes, because then you might have 10 alt accounts and then it's just really not fair, to be honest. So that's why we run it quite short. So if you are watching this on the delay, I do apologize, but that is the reason why we do it. So yeah, as I said, Apex, Funded Next, and Alpha Capital. Whilst I let that do, I will just I will sort of go through the questions. Sorry, where was I? COT reports for fundamentals as well. Correct. I do use COT data. I don't use it to like understand a bias, because sometimes COT data is like lagging data, right? So what you have to do is, like, for example, fundamentally something can happen that week, but COT data is extended positioning to the upside, and then like big sell-off happens, but it doesn't show in the COT data for a good few weeks. That's why it's lagged. So the way I like to do it is, for example, let me show you. So I use this website. It's a good free website. I'm always looking for something for free, to be honest. I'll do it like this. So I'll look at, okay, what is the positioning for, I don't know, the euro right now? So I'll get up generalized COT, i.e. longs and shorts. Then you can dial down into funds and etc. afterwards. So for example, do that. So for example, if I look at euro positioning right now, we came from a stretched positioning on here, and I'll look at just previously how has positioning been around 150k contracts, and you can see that it's been quite stretched in terms of positioning. That doesn't mean I need to sell the euro though, because you can see on price action it's been bought massively. So what I do is use it in anticipation of reversals. So I'll think, like, even if positioning is stretched, I'm not going to be like, I'm not going to buy the euro anymore because of stretched positioning. What I'll do is think, okay, are we seeing slow shifts away from that fundamental view? And if it's a yes, then I will think, okay, now there is going to be a big push because of how stretched positioning is. That's the only reason, or the only way I use it. I don't use it to generate a trade idea. Can you show pre-AED JPY analysis? I can. I will do in just a moment. Retail sentiment, COT data, seasonal data, many stuff. There is a lot of stuff. You just got to work out what works best for you, to be honest with you. Are you trading today? I am not. It's not like I'm not going to trade today because of X, Y, and Z. I'll trade if there is a reason to trade. I haven't seen any pairs that I want to be getting in because I'm waiting for the pullbacks, and we are starting to see the pullback. I'll probably wait until after the Fed meeting and then decide from there. Gold is very volatile, I'd agree. Prediction for gold, I don't really have a prediction on it, to be honest with you. I work in like quarters and see what's going on there. So I've got the names now. So that's been about 2 minutes or so. So let me just copy. Random name number, random name generator. There we go. So we'll get onto this list. And then obviously as we go through the list, we'll be answering questions as well. But for those who are new here, the way this works is as follows. If you're OG, obviously you know. But for those who are new, basically what happens is we spin the wheel. So this first one will be from an Apex account. You will spin the wheel. Let's say it lands on your name. Then what will happen is your name will pop up. I'll give about 45 seconds to a minute because obviously there's a stream lag. And then if you don't put your name in the YouTube chat and say you're here, then we have to move on. So you must put your name in the chat within that when you see that. So that's why I give about 45 seconds to a minute. And then what you do is you go onto the Discord, onto the Chart Fanatics Discord, then open a ticket within 24 hours, and then you can obviously claim your account. So this is for a Apex account. So let's just spin and see what we get. So are there any other questions? Let's see. Actually, wait, I've seen it's just landed. So Yassine FX.1, if you're here, please drop it in the YouTube chat, say you're here. If not, we'll obviously have to remove you and then respin. You need a good system for entry as well. Yeah, so at the end of the day, technicals they both work in tandem with each other, right? Fundamentals give you direction. Technicals is a reflection of that fundamental view. So that's when you can use like breaker structure, supply and demand, whatever technical strategy you want to use, it all works at the end of the day. But what matters more, in my opinion, is obviously direction. So it's like technically you can buy any currency you want out there, regardless of where it is, because the fundamentals might be positive. So you know in the future, it's going to be higher than your entry. That's more investing, obviously. We don't want to do that. We want to capitalize on risk to reward. So therefore, that's why you refine it with technicals. So that's how you should be thinking about it. So Yassine is here, perfecto. So that's for Apex. Remember, just claim it within 24 hours into the Discord. So this is now for a funded next account. So let's spin and see. Let me see. Abel. So if you're here, Abel, please just say yourself in the YouTube chat. But yeah, as I was saying, where was my train of thought? Can't remember now. Gold always betrays me somehow. That is true. We're in a very poor time. Still need to understand. I do mentorship. I've not done it for a while. It's not something I really push, to be honest with you. But if you want it, then you can obviously reach out to me. I think my Instagram is in the bottom in the description, so you can just send me a DM. How did you learn to be patient? That is a very good question. Let me just double check if Abel is here. You're here, perfect. I see you. Amazing. So that is for a funded next account. So let's remove you and respin for a Alpha Capital. So my Insta, I think, is in the description. If not, it's Mark Fraser. Legal Bean, if you are here. So yeah, anyway, where was I? So the way I built patience, right, is I still traded how I did before, which was generally short term. I was never like an in and out in a day sort of person, right? I was never like a very day trader because that just didn't align with myself. The way I did before was like in and then hold it for maybe like 1 or 2 days and then exit. Obviously, what I did during that time when I was trying to teach myself patience was I entered a swing that made sense. So at the time it was Eurocad sells, and that was during Trump and not Kamala Harris, the one before that, I can't remember her name, when Trump first came into power, right? So I entered a sell on Eurocad at that time. And then what I did was hold that sell, but still did the other trades that I took and just held and held and held and held and held. And I had to build faith, and I had to hold and hold and hold and hold. Regardless of what I saw with technicals, I had to build that faith. So I entered one swing, still traded how I did before, and then just built faith and patience over time. So Legal, I see you here. Perfecto. So as you know, you've got to create a thing within the Discord. So that's how I built it. It was Eurocad sells. I think I have a screenshot. It will be on my Insta highlights, like the trade that I took, I think. But that was for like a year, which is pretty nuts. But that's how I did. That's how I basically just built my patience. How then can you swing on props for holding? I haven't done any of those big trades on props yet, so I can't say for sure. But I'm pretty sure I've been told by a couple of the big prop guys that there are some swing accounts, and that's mostly what I'm going for. But I haven't done like those big long-term trades on those prop accounts just yet. Can you explain in layman terms what is dollar intervention? So basically, intervention is when a central bank is not, or just in general, someone's not happy with how much the currency has moved by. So the way it works is the MOF will say, okay, we will now want to intervene in the currency markets. You have what's known as floating, dirty float, or dirty floating, and pegged currencies. So basically, a pegged currency is a currency that's pegged to another, mostly against the USD. So it's mostly against the dollar. So for example, a visual representation of that is if you look at USD AED dirhams, so the dirhams, right? You can see how price action, if I zoom in, if it's even going to let me, just because of how crazy, I'm going to have to go like super short term on it. You can see how the currency is pegged around 33.67 against the dirham, right? So that's a pegged currency. Why they do that is because of stability in the exchange market. So why would they do that then if they want stability? Well, obviously every country wants stability, but it's mainly for companies, right? And mainly for other understanding profit and loss. So for obviously in the UAE, they're very oil driven. So they can understand that, okay, we're going to be paying this amount guaranteed pretty much because we have pegged ourselves against the dollar. So therefore it's easy to predict like profit and losses, right? You haven't got that currency exchange rate volatility. Dirty floating means a currency that is tradable, but the central bank intervenes. Now, normally you don't want the central bank to intervene in a currency. Why? Because it just creates unnecessary volatility. So that's what a currency is. It's a currency that's tradable on the general market, but the central bank intervenes. And floating basically means currency that is tradable on the general market, but the central bank doesn't intervene. That's basically the three types of currencies you have out there in FX: pegged, dirty floating, and floating. GBP, for example, is a floating currency. The euro is a floating currency. General a floating currency anyway. I don't think they've intervened in a very, 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 very long time. The USD, a floating currency, because the central banks don't generally intervene. Dirty float is stuff like the yen, stuff like the Swiss, and maybe other emerging currencies out there. Pegged, dirhams mostly, those sort of Arab currencies, because they are heavily reliant on oil, so they need a stable currency exchange rate. So that's basically what it is. And then a dirty float is mostly for Swissy and the yen. So what happens is they get an order from the Ministry of Finance to say, we want to, I don't know, buy or sell the $5 billion worth of USD. So the central bank will then go and sell USD at 5 billion of value. What happens is that strengthens the currency or the yen against the said dollar. And then that's when you see those big pushes here that you see. This was an intervention, but previous intervention was here. Where if you see this big sell-off, that was intervention. Previously here as well, if I just zoom out, this is more of like a history lesson now. But previous intervention was here. This was intervention. You can see that big move, right? A 500 pip range that it traded in. That's not normal market conditions. Then what happened is the currency weakened back off, or the yen weakened. Why? Because fundamentals didn't allow the currency to strengthen. So that's it. So that's basically what intervention is when the central bank gets an order from the Ministry of Finance to intervene in the markets. Hopefully that makes a bit of sense. Please, can you explain the concept of taken partials? So the way to do it, the way I like to do it, is, for example, if I'm, let's say, I don't know, short dollar yen right now, and I sold it from here, and it makes sense to continue fundamentally for whatever reason. What I'll do is go on the higher time frame, because remember, I'm swinging, right? So I'm not looking to hold forever. What I'll do is look towards the next low. So the low at, let's say, 150, up 150. There we go, 150. What I'll do is, let's say it gets down there, whatever, it gets towards there. What I'll do is ask myself, does it make sense fundamentally still? If it's a yes, I'll take off around 50%, sometimes less, depends on my confidence level, and then leave the rest to run. Then you'll leave the rest to run towards the next low. So now you've got 50% of the original position here. So that's exited that half position. So that you've got now the original 50% towards the next low. And then you do the same thing, maybe exit 20, 30%. Because at the end of the day, right, it's about making money. So it's not about trying to get the best trade possible. It's about making money. So this way, I'm not exposed to pullbacks. And that way I can bank at least some sort of money. Some people have trailing stop losses. That's perfectly okay as well. It's pretty much the same as partials, to be honest. But I've always found that for me, mindset-wise, it's always been best to take partials. What platform do you use for COT? It's this one here. tradingstir.com/COT. So I'll put it on here. That's the URL for COT data. Look, all the COT data is going to be the same, right? Because they take it from the CFTC website. So you should get all this exact same. I just like using this one because it's the simplest. What site is that for COT? Trading Star. Do we think we're in a commodity super cycle? Good question. It seems so. Commodities has done pretty well for a good few years now, so it seems to have done pretty well. Whether or not we're in a commodity super cycle, maybe. But yeah, that is something to be seen. Do you work around prop firms if you're a string trader? I think I answered that. It was my old Xbox gamer tag when they used to choose for you. Oh, do you go with entire size initially? So the way I like to do it is, I actually learned this from Nomura, which is a Japanese bank institution. So the way I like to do it is I have a range between 0.5 and 1.5%. Then, so basically I'll risk either 0.5% or up to 1.5% or anywhere in between that. What I then do is ask my confidence. So confidence is, let's say, 3 out of 5. If I'm a 3 out of 5, maybe I'll enter 0.5 to 0.75. If I'm 5 out of 5 in confidence, because everything lines up, then I'll enter 1.5%. I haven't been 5 out of 5 for quite a while because obviously of how choppy this market has been. So generally it's been about 0.5 to 1% normally at the moment. But yeah, that's the way I do it. And then if I'm like 1 out of 5, I'm not obviously going to enter. It's until I gain more confidence. And that will come from like speeches or data or whatever. I think, yeah, so I showed you about the pegged currency or dirty market, dirty float or a floating dirty float is like the yen, the Swiss. UNH gap. Oh, okay, interesting. Do we teach in Beyond? I do, yes. Why JPY intervention only causes sell-off in USD and NZD and NZD AUD is bullish. So it's kind of, if there was intervention, it would have been broad market yen strength. So you can see here how a big sell-off. If we look in previous price action around previous intervention, it's broad-based. Right, that was previous intervention. And then where's previous intervention before that? Here, I believe, was around intervention. You mostly see it in the USD, but it's like broad-based, right? Here, think about it like mindset. So people think, oh, damn, they intervene in the market. It like goes everywhere, essentially. Like the mindset goes everywhere. So they're no longer really going to enter any more yen short positions, essentially. Do you add to your position? Yes, I do. So like I said, like I'll enter a trade and then I'll take out some percentage so I get more margin. And then I will load up another long on the high time frame pullback. So it's not like I'm entering on the 1 hour-ish little pullbacks here. I'll enter like, let's say I entered here, a long, take some partials, whatever, big high time frame pullback, enter another one. So it's not like I'm entering here and then here and then here and then here and then here because I'm not a lower time frame. I'm a high time frame person. So I will do only higher time frame swings. So like, let's say I enter around here, hold the long. If it pulls back and there's no reason for it to continue, I'll still hold that initial position, wait for a break of structure, whatever, then we get back in. And then you can load up as many as you can. Obviously, just be careful of how exposed you are in that market. You don't want to be like 5-6% exposed on just one pair, and then you've got other pairs to trade, and now you're like 10% exposed across. That's kind of silly. But yeah, apart from that, are there any other questions today? Obviously, we do have the Fed to talk about. We'll speak about it like next week. But yeah, right now, what I'm thinking is I don't think there's a big reason for the dollar buys to happen. It's only if Trump says something or if Powell suddenly says something. That's the only two that can actually drive a big push in the dollar. If nothing has happened, then you know these are just pullbacks to continue to go back lower again. Can you go over the yen? Oh yeah, AD yen. So for example, what I did, I think I spoke about it earlier, was I saw this 8-hour demand zone here. So 8-hour demand zone here. So basically anywhere within that makes sense. We have 106,500, which was around here. So that lines up with a high time frame level, prior highs, prior lows, and it's a demand zone there. Then what I did, dropped to the hourly, and then we saw a break of structure here out of that region, which was right here. because that created the low because it closed below this low. So it's a break of structure. We then pulled back. And then as I started to see it come long again, I started to go long. My stops were obviously below the low. And then I've held, and then obviously we're back to here. And then obviously held through this chop, right? Because I'm only going to exit if it hits my stop loss. That's the way I do it. I don't think there are any other questions, but that's basically it. I'm not trading dollar yen, by the way. Marco, one Apex trader account, as you said, but Apex trade funding is not accessible in my country. You'd have to speak to the mods in the Discord. I'm not too sure how you can get around it. Should you do challenge 200 to $1? No, because you have to over leverage to get that. So obviously you don't want to gamble because that's basically gambling. So you want to, if you got that much, right, it's probably best to put it into a prop firm once you've tested your strategy out on a demo account, and then grow small 10K accounts on a prop firm, rather than trying to grow 200 to 1,000, which is obviously possible, but you have to take leverage on that pair, and you don't want to take like crazy leverage just to grow it to 1,000. So I would not personally do that, no. But that's up to you, obviously, but I personally wouldn't do that. But apart from that, everybody, have a good rest of your day, evening or morning, afternoon, whatever time it is. And I'll obviously see you next Wednesday, same time. But yeah, let's see what the Fed says. I don't know what he's going to say. Let's just see. I want to see how the markets react to it and then accordingly react to it, essentially. But apart from that, everybody, I will have an amazing rest of your week, and I will see you all next week, everybody. Take care.